What is up everybody, welcome back to another stock market video, and today I'm going to be talking about how I made my first 10,000 US dollars or 14,000 New Zealand dollars in the stock market in my first 6 months. And in sharing this, it's not about me bragging, but it's just to say that if I can do this, then anyone else can if they put as much into learning and understanding the stock market and research as I have. Also in this channel, I'm always going to be transparent and just showing you guys what I'm doing. So when I started investing in the stock market after the March crash, all I really wanted to do was to make sure I didn't lose a lot of money as I learned the process. I did, however, knew that the standard rate of return for the S&P 500 was 8 to 9% a year, so I wanted to at least beat that. However, coming out of the pandemic, the stock market surprisingly recovered very quickly, so I then changed my target to 20% for the rest of the year, as I saw everyone else was making a lot of gains. 6 months later, I ended up beating this 5 times over and effectively getting 100% return on my money. So this has really surprised me as a new investor, as I've only done it for such a short time, or it might be just the fact that the stock market is really good right now. So I just want to make the point that to some people this might not be a lot of money, and to others it might be, but to me personally it is a lot of money because it would take me over a year to save up if I had to. As always, hit that like button to support the channel, and if you're interested in investing, please hit subscribe. With that said, let's get on with the video. So just very quickly, this is my Hatch account. This allows me to buy US stocks, but I haven't really looked into this further. I've only got one stock in this, and the value of this account is 523 New Zealand dollars. So the one stock that I do have is Disney, and as you can see, it's literally one stock. So it's good to see since that transaction that I've come so far in such a long time, and I'm actually making some decent money. I just want to point out that each transaction is worth 3 US dollars. So when you're buying stocks, you typically want to buy at least 300 US dollars worth, or if not, 600 US dollars. That means that if you're paying 300 US dollars, it's going to cost you 1% in fees, or if you're paying 600 US dollars, then it's going to cost you 0.5% in fees, because you also got to take into consideration the conversion fee from the New Zealand dollars to US dollars. But getting back to the portfolio, we can see here on April 17th is when I opened up my account, and after that initial transaction, I didn't put any additional money after early June. And in early July, this is where I started to put some big money into my Hatch portfolio, as I knew that investing was going to be the way forward. So during July and all the way through August, I was actually down for most of those months. So bear in mind that these figures here are in US dollars. So looking at August 17th, I had $4,200 in my portfolio. And a week later, I ended up putting an extra $2,000 in there, making up to $6,500. And also this time, this is when the portfolio was now starting to come consistently in the green. And as we move across, we can see here through August and September, the portfolio is getting some very good gains all the way up to 20%. At the end of September was really where it started to take off. I've got 21% in portfolio gains. So going across October, we can really see the gains taking off. And about here on October 31st is when it did its big massive jump, which I wasn't even prepared for. So in the 21st of November, my portfolio total was at $12,700 and I'm up $3,000. And from this day, as we go through November, is when it started getting real crazy and we hit $10,000 in profit.
Oh my God! Wow!
So if you're a viewer of my channel, it's probably no surprise to you, but my two biggest stocks holdings are NEO and also Tesla. So I started buying NEO at the start of July after they did this big climb and dollar cost averaged all the way through. But obviously I still wasn't really sure and whether I should be putting my money into NEO. But at the time, all I could afford was just to do these small transactions till I saved up enough money. So in the early days, I bought 8.8 shares here, 20 shares here, 29 shares here, another 12, and then 10. And as I scroll up, you can see my purchases here where I just dollar cost average all the way through. So dollar cost averaging just means that I'm buying shares at periodic times, and these times was when I was getting paid and having enough money to buy them. So for NEO stock, around the 13th of October is really when it did this big rise and where I made a lot of my money. You can see here that it's gone up by about 133%. And again, if you're a viewer of my channel, it'll be no surprise to you that my other stock was Tesla. So Tesla this year has had an incredible run by going over 600% in its value. However, I really didn't know much about Tesla, so I didn't start investing in them till a little bit later, until I knew how their business worked. and their share price looked very expensive. So right here is my transactions of when I bought Tesla stock for the first time on the 7th of July. So that was the split adjusted price. So let's just put that in and see how much it would cost right now. So in today's terms, Tesla is at about $620. So my first purchase was at $268. It was just a pity I didn't buy very much of it.
Please, no! No! No!
So let me just scroll quickly through my transactions, but you can see here that I was dollar cost averaging into Tesla stock just like I was doing with NEO. So one of the key reasons for these large gains that I've had is because I changed my risk tolerance. I pivoted from buying ETFs and mutual funds, which is regarded as lower risk, to buying into growth stocks. So going over to Investopedia, we can see that there's really three main stocks. There's income, value, and growth stocks. So reading this, most growth stocks tend to be newer companies with innovative products that are expected to make a big impact on the market in the future, but there are exceptions. So another important point here says growth stocks can provide substantial returns on capital, but many of them are smaller, less stable companies that may experience severe price declines. And this is very true with NEO, where they were basically on the brink of bankruptcy, but due to local government and local authorities bailing them out and giving them funding, they were then able to thrive their business. So the other popular stock to buy is value stocks, which are undervalued companies, can often provide long-term profits for those who do their homework. A value stock trades at a price below where it appears it should be based on its financial status and technical trading indicators. So these are the type of companies that you look into that have very good fundamentals, where they make a lot of money, a lot of revenue, and have a lot of earnings, and have a good balance sheet and good cash flows. But for whatever reason, the share price does not reflect the company. And then by buying these companies when the share price is low, over time the share price will increase because it will eventually match how good the company is performing. And everyone will see this, for therefore they'll start investing their money in it. And the last definition is income stocks, which is something that I don't typically go after. Investors look to income stocks to bolster their fixed income portfolios with dividend yields that typically exceed those of guaranteed instruments such as Treasury securities or CDS. So these are the types of stocks that people buy when they're trying to build a dividend portfolio. So while it's nice to have passive income, the dividend for me is too low and the returns are too low. So typically I'm okay with higher risk and therefore go for growth stocks. So reading the key takeaways, growth stocks are expected to outperform the overall market over time because of their future potential. Value stocks are thought to trade below what they are really worth and will thus theoretically provide a superior return. The question of whether a growth or value stock investing strategy is better must be evaluated in the context of an individual investor's time horizon and the amount of volatility, thus risk that can be endured. So really when you're investing, you've really got to understand how big your risk tolerance is. If you're prepared to have a really high risk tolerance to get the high rewards, you got to understand that these companies can go bankrupt. Typically, growth stock companies aren't very profitable. They take any earnings they get and put it back into the business so that the business can grow much faster. So in my research, there is a lot of articles about which stock is the best. Is a growth stock better than a value stock? Is a value stock going to return more money over the long run instead of a growth stock rising really quickly and then declining again? And in my opinion, it doesn't really matter if the company is labeled a growth or value stock, but what it comes down to is what the actual business is doing. Understanding the business model and understanding where the company wants to be in 1, 2, 3, 4, 5 years from now, even 10 years from now, what they're trying to achieve and what they're trying to do. And ultimately, if the company can execute on its plans, the share price appreciation will follow. So lastly, with my investing, what I like to do is I like to compare myself with the S&P 500. If we take this date here in the graph of 11th of June, we can see that the S&P 500 has gone up 22%. So the reason why I compare myself is because it's really good to understand where the actual market is going. And as we saw in March, we don't want to be buying stocks as they're falling. The main thing I'm looking for is trying to get gains, but no point trying to get gains of 20 to 50 or even doubling your money when the overall market is in a downtrend, because that's going to be very difficult to do. And if you're buying all these stocks while the market is going down, you're eventually going to end up losing money. It's always important to remember that even though this year has been very good to be in the stock market, it doesn't always go up. Some years it actually declines or just goes sideways without any gains. That's why I like to see the bigger picture and adjust my goals accordingly. So yeah, that was my strategy for how I made my first 14,000 New Zealand dollars in the US stock market. My results are certainly not extraordinary because I've seen screenshots in different various groups, 500 to 600% returns, mainly on Tesla and NIO. But a majority of stocks, if you have a look, have also doubled or tripled in value since that time. So while I can't show you screenshots, some of their portfolios range from $50,000 all the way up into the millions. So during this period, some people have been getting very rich from the stock market. I just want to say again that if I can get these results, anyone else can too, if they just learn and put the research in. If you've seen from my previous videos, I use the same method and understanding that you see since the beginning. Well, that's enough for me today. Thank you for watching. As always, safe investing, and make sure you do your own due diligence in the stocks that you buy. May the gains be with you, and I'll see you on the next one. Goodbye. So just for the people that have watched till the end, I brought out the celebration gun. This is the second time I've done it. I'm gonna load it up and then let it rain.